Welcome to Commercial Real Estate Pro Network's CRE Radio. Thanks for joining us. My name is Jay Darren Gross. This is the podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today, my guests are Nick Earls and Eric De Nicola. Nick and Eric are full-time real estate investors, developers, and founders of Winterspring Capital, a private equity firm based in Boston, Massachusetts. Together, they have developed over $56 million in multifamily assets, with another $40 million in the pipeline. And their work includes value-add, affordable housing development, and luxury multifamily condo developments in the Southeast U.S. And in just a minute, we're going to speak with Eric and Nick about their experience and how you can learn and identify and grow your multifamily portfolio. But first, a quick reminder, if you like our show, CRE Radio, there are a couple things you can do to help us out. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We'd love to hear from our listeners. Also, if you want to see how handsome our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, Nick and Eric. Welcome to CRE Radio.
Hey, thanks for having us on.
Thanks a lot.
Well, I'm looking forward to our conversation today. But before we get started, if you could take just a minute and share with the listeners a little bit about your background.
Yeah, so Eric and I have actually been friends for almost 20 years now. We met each other when we were kids in high school. Did a lot of team-oriented stuff together, football, powerlifting, played, competitive video games. Kind of got a good, team rapport from a young age. Always had that sort of rebellious streak, didn't want to work for someone else. Didn't know how we would do it at that young age, but we had this idea, maybe we'll start a company someday. And went our separate ways for a few years in college and a couple of years after that. And I was working in real estate. I got my real estate license in 2011, was selling smaller commercial apartment buildings in Massachusetts and Connecticut. And I said to Eric, I think this is a realistic way that we could kind of break out of the machine, get financial freedom, something I think a lot of your listeners probably interested in. That was our original goal. And we thought, why don't we buy a rental property, save up some money for a few years and buy a rental property. And over the course of saving up money, we were saving up money for maybe 3 or 4, maybe in 5 years, forget the exact amount at this point. But we decided that I had seen a really good opportunity in the Boston market for condominium development. Boston's a unique market. Either the number 1 or the number 2 life science city in the country, depending on who's ranking it. San Francisco's right up there, but Boston's right up there as well. And over the past 10, 15 years, we've had a huge influx of high income life science industry workers. So we're talking, biotech, Moderna, one of the vaccine producers, is located in Cambridge, right outside of Boston. So these people are high income. The population has kind of boomed. We've already surpassed our 2030 projections. And a lot of these people go for nice luxury rentals, but a lot of them also want to own condos. So there's a good niche in that market for condominium development. And we found our first project in 2015. It's a small project. It was a dilapidated existing 2-family where you could add a 3rd unit. So we added a 3rd unit, fixed up the existing part of the building, added that addition, and then divided into 3 condos and sold those. And we've been doing that ever since. It's one of the main fronts of our business, but that's kind of how we got into real estate. And we've been doing it ever since.
Wow. Well, and the condo thing, I don't think that typically people think that way. I think most often people I talk with, they're thinking more of like a build or buy and hold or some sort of a, you're controlling the entire asset kind of thing. But there was a time I'm trying to remember in the timeline, but I want to say it was maybe even earlier, back around 2000. I remember as an insurance broker, I was dealing with a lot of people that were converting apartments to condominiums. And that was I think it went through like up until like 2008 or so, but there was a fairly significant move to take some of the multifamily assets out of rental, convert them to ownership assets, and then sell them. And there was a delta in there, and I think that was a big play for developers. Um, so so you got in basically on a condo, and it would be development because you did convert the use from one, and then you also added square footage. Um, is that been your primary vehicle then? Since then, has it been more condo development, or do you also do traditional multifamily, um, buy, hold, value add, uh, et cetera?
We do a little bit of everything because we're pretty opportunistic, but that's really the meat and potatoes of our business. It has been. We're continuing to expand a bit where right now we have a deal that we're going to be converting actually from an old office building into apartments that we'll hold on to. But the condo development where we sell at the end of the development process, maybe typically like a 2-year period at this point in Boston, that's really where all our, you know, build and sell condo development projects are up in our neck of the woods, are Boston. And we've kind of seen that from the start as this is our niche. This is what we are good at. This is where we can add a lot of value. Once we kind of got our foot in the door, which is really hard in this market, we see a lot of other developers kind of struggle with that first step. And so once we got our foot in the door and we saw how to do it, we understood the process, we understood all the variables, for the most part. There's always something new every project. And we're always learning stuff from other developers and other experts in the field. But once we saw that, we said, okay, this is a pathway to making, quick profit, sort of, relative to typical real estate profit. And we can use this as a boost for our business long term to start compiling assets. So we had that first project where we added a third unit, sold the 3 condos individually. We ended up selling them for a higher price per square foot than we had even projected when we started. So that the market, was at a good place at that point. So then we were able to get into our next 2 projects simultaneously. One was going to be 3 units, 3 very large luxury units in a city right outside Boston. Ended up being only 2, which was a long sort of process and fight with the city and neighborhood. And then simultaneously in the same neighborhood as our first project, we built a 7-unit condominium building, which we sold all 7 individually. The majority were under agreement before we even finished construction on that building. So we really said, okay, this is something we're good at. We know what to do. We know how to add value here. We know what to look for. So, over the last 5 years, those opportunities have continued to shrink because there's more developers trying to do it. More parcels that had opportunity have already been snatched up and redeveloped, at least, in Boston. But there's still a lot of opportunity, and we'll see it and we'll think creatively. But to get back to the point of your question, it's kind of now just one of the components of our business. We're also working with the city on an affordable housing project, which will be 6 homeownership units and 1 rental unit. And they're capped out at certain AMI, area median income rates. So you work with the local government on that, which is its whole kind of own process, still our development niche. And then we're working on this office conversion, like I mentioned. And then we also have some pure multifamily rental properties that we own on the side as well.
Gotcha. And in the 7-unit you mentioned, was that a ground up development then, or was that same kind of a conversion or change of occupancy from a rental to an owner?
It was a prior 2-family. And since we were still kind of early on in our business, we actually lived in the 2-family while we were permitting it. And then we knocked down the 2-family and built the 7 from the ground up.
Got it. So I'm kind of curious, from the working with an existing structure as opposed to a new ground up, what are some differences and some lessons or some even I'd be curious just on the numbers. Do you find I've talked, it seems like most of the conversations I've had was mostly with value add people, but occasionally I have conversations with new construction guys, and it's kind of the reminder of that, the original value add was new construction. I mean, you start with a bare piece of ground and put something up. I'd be curious to hear what your kind of thoughts are on the comparison between the two, the working with an existing structure as opposed to starting new.
So it's definitely cheaper. Assuming there's no major issues with the existing structure, it's definitely cheaper because you're removing all your excavation, your earthwork, your foundation, all those components are removed. And then the building envelope, hopefully a lot of that can even stay. So a lot of your costs can be cut down. You're probably looking at anywhere from $50 to $75 a square foot in savings when you're renovating an existing structure. The trouble is when you're doing like the projects that we do for these luxury condominiums, a lot of them are urban infill in these densely packed neighborhoods where you'll find these odd lots that are maybe a double or a triple lot. They're much bigger than the surrounding lots, but it'll have this little 2-family on it. And it's not really practical. You're going in there, you're trying to build something that's 5 times the size of that building. It's not really practical to keep it. So in those situations, you just knock it down and you start a new one. You could try to add to it. And sometimes you'll run into historic boards that say, hey, why don't you just keep it and add to it? But that's in those situations where you're trying to square peg, round hole something and force it through that doesn't really make sense. Your costs will actually increase because you're going to have to do a bunch of funky engineering and all sorts of stuff that's really unnecessary. So it depends on the situation. When we're looking at a nice big building like this office building Eric was mentioning, it's a 50,000 square foot existing office building. That's all the space we need, and it's configured perfectly to just convert it into apartments. Whereas when we're trying to build a large condominium building and there's just this little shack, single family or 2-family on it, just knock it down in that sort of a situation.
Yeah. On the office conversion there, any issues with zoning or any kind of change of use issues with the local municipalities? Or
that's a very good question, because it is kind of central to this project, but almost like more central to our condo development. We have so many zoning hurdles because most of our projects in Boston are require zoning relief, require variances because they're building 8-9 units in a 2-family zone, for example. And it's very difficult, very long process, very political process. But what we've noticed with this office conversion, it's in a city outside of Boston, sort of a satellite city, an old manufacturing hub. They actually seem to welcome it. They like developers there. Unlike Boston, it's very pro-business, pro-developer. They want you to come in and upgrade the city. They don't force you to do a certain amount of affordable units. You can do all market rate. And so kind of the point I'm getting at is you do need a special permit. Yes, there's zoning because you're, converting from one use to another. And in our case, it's going to be mixed use. We're going to keep retail on the first level. There'll be an office component, and then the rest will be residential. But they're much easier to work with than what we're used to in Boston. So they're really willing to help guide you through the process. It'll be a shorter process. It has been so far. As long as you meet certain requirements and kind of uphold the historic nature of this building based on where it is, they will likely grant you the special permit you need.
Gotcha. The development compared to like an ownership, kind of a long-term play. How do you guys look at that? I mean, you mentioned in the beginning that the first development of the 3-unit kind of, you recognize the opportunity to get the money and you could maybe recycle it or put it into your next projects and that. But the mindset and just kind of I'd be curious to see how you guys think of the short term versus the long term kind of thing as between the two different types of opportunities?
We both prefer the long term, and that's why we got into it. But we were young guys when we started our business. We were 25 years old. We had scraped up the money to start the company and do that first investment, but it wasn't realistic for us to pursue. We've seen people do great with the buy, renovate, refinance strategy. But we're kind of similar to that, where we didn't have that much money starting, and we needed to build up a pool of capital. And then we figured out, hey, we're pretty good at this condominium development thing. We're doing a 32 unit luxury one right now. It's our biggest project. So we've scaled up pretty successfully in that niche, but all along we're after that passive income, that people want. We want to own rental properties and build up a team below us that can help us manage these rental properties, interface with our property manager, eventually get to the point where a few years from now, Eric and I don't have to work that much, and we have financial security. That's what we're really doing this for. So it was just kind of a life circumstance thing that this condo development became a pathway that we embarked on. But right now we're very actively pursuing things for our rental portfolio. That's what that office to apartment conversion is. We have another one that we're looking at, another office to apartment conversion deal we might be putting an offer on this week. So we're getting to the point now where we're almost focusing on that a little bit more. But we really like the condo development for a quick kind of influx of capital that you can then put into longer term investments.
Yeah, no, absolutely. The ability to get your money back out and be done with something as opposed to the ongoing. I was kind of curious. A lot of times I talk with people in the they come from like a flipping mindset, and there's almost like a light bulb that finally goes off, that they recognize all that money's going through the system, but not a lot of it's staying, kind of thing. And
Exactly.
the way to really, grow wealth or accumulate is through acquisition and holding, kind of thing. And I think so many times, I think people are chasing shiny objects, whether it be the stock market or real estate or whatever the hot topic is, and they're expecting a quick quick buck kind of thing. And there's plenty of stories. I mean, you always find the story about the guy that bought something for nothing and turned around and sold it on the same day for millions or whatever, and he might be in a lawsuit afterward. But there's there's those stories are out there. And and then you look at there was somebody that read something, but it was basically saying most of the wealthy real estate investors are older. I mean, and it's basically because it took time. You start off with something and you've scraped and you've got into it, and maybe it didn't cash flow in the very beginning, but over time everything kind of settled and it turned into a nice portfolio there. So no, it's good. I'm kind of curious. So you guys are in Boston. A lot of times people get dissuaded by their local market based on the challenges, and they start looking elsewhere. What were you able to find? Was it your local knowledge that gave you an advantage? Was it the fact that you were working in real estate that you were able to find and recognize the opportunities, or what kept you in that market? And then also I'd be kind of curious to hear, how you look for other markets. It sounds like you're starting to work outside of, Boston a little bit.
Yeah, I mean, we're so familiar, obviously, with the Boston market. This is where we grew up, where we've lived most of our lives. That, yeah, I guess we have some more insight. We're very familiar with, the geography, where high populations are, where the jobs are. So that gives us a little bit of a leg up. We're just used to it. And then just dealing with the real estate industry and data that we see and people that we know, and talking with other developers over the last 5 to 10 years, it has given us a leg up. But we did kind of what you said, where, all right, let's kind of expand a bit outside of this, because there's other markets out there We talk to guys who own property, all across the country. They don't have to be right on top of it. Maybe we don't develop somewhere else remotely, but we can still own and have a great property management company hired that'll handle the property for us. So we had been looking the last year really in the southeast of the country. We had a few deals that we put in LOIs on, got to best and final. And these would have been larger value add apartment deals as part of our diversification strategy. There wouldn't be, major construction or anything like that. They would be really managerial value add inefficiencies that we saw from afar. Built up a lot of relationships with brokers down there, Florida, North Carolina, South Carolina, Georgia. And we just really liked a lot of the population trends we were seeing, the demographics we saw, rent numbers. But it almost started moving really fast, where it got to the point where cap rates were compressing so quickly on some of these deals that you were paying for 2 or 3 years out. And if you didn't enact your strategy very quickly and it didn't all go to plan perfectly, I mean, you might be in this thing in year 2 or 3 and you're not even at, what you're hit the point that you really should have paid for it in the first place. So we sort of put the brakes on that a bit because we started to say, look, we know our market better. We're actually seeing more aggressive cap rates down there than we are up here in some cases. So why don't we sort of reel that in a bit, continue to focus? We'll still keep an eye on any market in the country that there's an opportunity. And if we can make something work, we'll jump into it. But right now we still see our knowledge allows us to see, sort of the best opportunities for us are up here because we can enact all these kind of parts of our business, the development, the property management, the rental, and then also working with our home local city, Boston, to do some of these affordable development projects that we think this first one we're working on will really get our foot in the door with the city and just add another vertical, to our business. And that probably wouldn't be as feasible or possible when we're operating, from 1,000 or 2,000 miles away.
Yeah, no, I think that's well said. I think that it's with the internet and Google and Google Maps and all that. It's so easy to be wowed by something so far away when you don't know the warts or where all the bodies are buried or whatever those might be, kind of thing. And just to have some sort of a local or just base knowledge. I mean, it doesn't necessarily have to be local. I know plenty of people that do it remotely. I've got some, properties myself that are remote and stuff, but having a base knowledge, I think more importantly is having a team, that you can trust. I'd be curious to know if you can kind of describe who are the members on your team and how you see that as far as a level of importance when you are looking in these other markets.
Yeah, so I mean, as developers, we have a big team. Within our company, we have a couple employees. We have kind of a third junior partner, another friend of ours, Kyle, and he's really good with investors. He kind of handles our investor network. He also finds deals off market and kind of interfaces with, people. When we're getting a deal off the ground, he'll get, kind of the initial research going. So he's a very valuable team member. And then we've got a virtual assistant, we've got a social media manager, and we've got a graphics guy on our team. And that's kind of our in-house team. But then when you expand to relationships you have with other people, we have a huge broker network. And that's extremely valuable. People talk a lot about off-market prospecting, which I think is valuable. We've gotten deals from that, but the best deals we've gotten have been from brokers. And I think it's just more talk to a bunch of brokers rather than talking to a million property owners, and deals will come to you, So I think it's a more efficient pathway. They do that full time. Obviously they take their cut, but they deserve it. So that's kind of our mentality, is an everyone wins mentality. So we have a lot of brokers in our network. And then for our development jobs, we have a big team. We have a couple different architects we work with. We have a really good zoning attorney for our Boston projects. And then we have zoning attorneys that we work with in other markets, because that's kind of a very local knowledge based thing. A zoning attorney will usually only deal with one municipality or two municipalities, because the rules can be very different, the regulations and laws and all that. And then also we need engineers. We come from a sales background. Eric and I both. He has his real estate license. I obviously got started in sales. And then our other partner, Kyle, has his license as well. But now we've been working with good brokers on the sales end for our condominium units. Our upcoming project, a 32 unit project, this is projected to be gross sellout of around 25 to 26 million. So we really wanted to bring in, top best in class brokers for that. So we brought in a really good brokerage, Charles Gate, again, local experts. They're not, worldwide or nationwide. They're really focused on this sort of product that we're developing, luxury condominiums, top of the market, 800 to $1,000+ a square foot. So we have confidence with them, and they work with you, during the design phase and the planning phase. They're there every step of the way. So they're really a team member as well. And they're different, I would say. They could bring us a deal, but we also have brokers who just shop us development deals. They're not on the sales end. So it is kind of two different buckets. And then also we're working with an interior designer for our projects. They do a lot of legwork up front. They look at lead times for, appliances and plumbing fixtures and lighting fixtures. Super important in today's supply chain issues, economy that we're in. And they look at the local market, what sort of design you can get away with while still fitting with your budget. So they're extremely important. We've got a bunch of different types of engineers. So the list goes on, but as a developer, a team is number one. It's the most important thing. No man is an island, and that's especially true, in this business.
Yeah, there's two things that come to mind. One is you mentioned supply chain. Have you seen much change with where you started versus where you're ending up, whether it be budget or just having to make some modifications based on availability or delays? Or can you speak to any of that?
Yeah, we have seen not a major change. We've kind of timed stuff and budgeted properly. We've talked to a lot of other developers who might have been, mid-order when kind of COVID started and sort of the supply chain issues that followed that, we're still in. So we are seeing issues, but we're kind of working around them where we say, okay, look, something like lumber, which is a major component of any construction job we do. And of course, as you probably know, and a lot of your listeners know, that's been a hot topic in construction, the cost of it, the availability. So we plan for that. We give a contingency, we add a contingency into our budget of a decent chunk above what it should cost, what it has cost in the past. Our total cost per square foot has gone up a bit. Sale prices have too, so we can kind of work with that. And then lead time is sort of the biggest thing, as Nick just mentioned. The interior design firm we're working with, when they're making suggestions even on appliances or finishes, they're actually factoring that in. They're going to that level where they're saying, look, we think for this market, for the buyer, for this unit that you're trying to sell, this high-end condo, we would probably go with this, appliance package, but it's made in Turkey, and we probably should choose this one instead. It's equal quality, but you're going to get it probably in 6 months instead of 10. So even little things like that, we're just trying to be right on top of right away. And it hasn't really cost us yet. Because we're so kind of prepared for it. But I could easily see those becoming major issues if you don't prepare at the onset.
Yeah, no, I just hear all these stories about the house that's all done except for the the stove or whatever the specific item kind of thing, and it's I think it's affecting everybody in some way, shape, or form. But part of it. The other question that I was kind of curious about is you guys are working with these brokers. I was kind of curious, what is the the investment parameter or the criteria that you guys are because you have kind of a wide range of things you look at. Is that basically what you explain to the brokers? This is what we've done, this is what we're interested in, or do you have kind of more of a narrow view of what you're asking them to look for?
I think I generally, if a new broker approaches me, which has happened like in the past few days, actually. And I think what I told them was, we're very interested in condominium projects in the Boston area, development ground up. That's what we've been doing for years. But we're also heavily pursuing value add apartment deals in the area. And this office to apartment conversion we're doing, we consider kind of a value add plus, where we're using our development and entitlement skills to add value. So that would be the way I would answer that question to a broker. Pretty straightforward. We like either pre-permitted deals in Boston right now, just because of the political situation, or deals where the owner is open to entitlement contingency, a zoning contingency. So we don't have to purchase the property. We can tie it up for a year or two while we get it permitted, which removes risk for us, which is something that's very important. So that's kind of how I would steer them. We're not going to go after anything that's completely speculative on the condominium development side, just because those projects are so hard to get permitted. So we either have to have pre-permitted or a contingency, and then office to apartment conversions or other sort of value add plays where we can leverage our development skills.
And sort of to add to that, I mean, when we get some of these deals from brokers and we meet a new broker, sometimes we can tell pretty quickly. We know the local market, maybe that is in the borough of Boston, and we might be able to look at it in 10 minutes and say, well, they're trying to sell this thing for $5 million for this many units. We just analyzed a property yesterday for $3.5 million that couldn't work. That was almost identical. So we know this is just way over the top. We can sometimes make kind of quick decisions like that on deals, which is how we can review so many.
No, that's definitely useful. Again, one of the benefits of knowing the market, as opposed to trying to make the numbers work, as opposed to knowing what numbers work, kind of thing. So that's good. I'm curious also, you mentioned investors. Are you guys syndicating these deals, or how are you going about? What's your relationship with investors? What's the opportunity that for investors with winterspring?
Yeah, we are. We're syndicating our deals. Early on, we started with our own money, and we kind of gave the anecdote about that smaller condo development we did to start. But as we grew, we obviously realized the way to do this is you have to bring in outside capital. So yeah, we syndicate our deals. We have investors who have been with us now for several projects. A lot of them reinvest. We have kind of unique structures sometimes where we might, with something like the office conversion, we'll actually be able to pay out all the investors when it's done, a preferred rate of return that we agree on initially. And then they're completely out. They get all their profit. They get their initial principal back, even if we decide to hold on to the building as a long-term investment. With the condo developments, it's a balloon payment at the end. Just because the nature of how that business works, they'll get a prorated share of every unit sold as we go. So yeah, we've had a lot of success syndicating. We have a lot of people who are interested in when we have a new deal, investing in it. Initially started with sort of smaller relationships that we had in the industry. And it's really kind of ballooned from there.
Yeah. Now that relationship you mentioned, where you in the one where the investors will be cashed out and you'll have the opportunity to hold that. That's one that's always kind of appealed to me, just from understanding that, because especially if you're a long-term hold, is you can satisfy both the investor to get their return, and also if you can create something for yourself to hold it. That's always been I don't know, I've always thought that was kind of a neat way to do it. Let's see, I wanted to ask you my questions here. I think that maybe, is there anything that I haven't asked you about? I mean, you basically just on that refi thing, is there anything that we didn't address that you feel like are important to kind of what you guys are doing?
Yeah, I mean, we could talk all day because we're doing so many different things, but I think we've covered a lot of the important topics. I think while we're on the topic of syndication, lots of people want to get into real estate, and it's really you got to figure out what fits your lifestyle best. You know, that for us when we were getting into it, we were kind of young and ambitious. We didn't have a lot of capital. If you have a lot of capital to deploy, it might make more sense to just be a passive investor, where you have, you know, a high income job. You invest a little bit every year into a long-term investment. You invest a little bit every year into maybe something a little riskier with a higher return, like a development job, like the condos we do. So really, that would be just advice that I would give to everyone. I actually wrote a book about it, Retire Early Through Passive Investing. It's on our website, but it just goes into kind of looking at your situation, if you're trying to get into real estate, and deciding what fits you best. Should you be an active investor? Should you be you know, a developer like we are? Should you be kind of somewhere in the middle where you're buying rental properties slowly while you're working? Or should you just go completely passive? Because I think there's a lot of different options to get into real estate. And if I had the opportunity to just be a passive investor from the start, I think I would have chosen that route. So just trying to spread the word on that. We're accepting investors, but there's a lot of syndication companies out there doing all types of different real estate investments, every asset class, every type of risk level. So something more people should learn about. I think the message is getting out there nowadays, but it's a little untapped and unknown. So just wanted to mention that.
No, I appreciate you sharing that, because I do think that while there's definitely an opportunity to be an active participant, the passive one is available to everybody, and especially higher income earners that are looking for opportunities. I think that's definitely great to remind people of that. If we could, guys, I'd like to shift gears here for a second. By day, I'm an insurance broker, and I work with my clients to assess risk and determine what to do with the risk. And there's usually one of three strategies that we look to try and employ. The first we look to see is if there's a way we can avoid the risk. If we cannot avoid the risk, then we look to see if there's a way to minimize the risk. And when neither avoidance nor minimizing the risk is an option, then we look to see if we can transfer the risk. And that's what an insurance policy is. And I like to ask my guests if they can take a look at their own situation. Could be their clients, investors, tenants, the market, interest rates, supply chain, however they want to frame the question, or however you want to frame the question. But if you can take a look at your situation and identify what you consider to be the biggest risk. And for clarification, while I am an insurance broker, I'm not necessarily looking for an insurance related answer. But if you're willing, I'd like to ask you, Nick Earls and Eric De Nicola, what is the biggest risk?
I think in the business we're in, and because we're in, a few sort of real estate verticals, if we focus, say, just on the condo development, I feel like there are two major risks. One is sort of the political and municipality risk in the city you're building, and I'll get into that a little deeper in a second. And then the other one is sort of a macro risk right now that we're in, potentially, the Fed raising rates over the long term. It does, potentially reduce buying power for individuals, and we're selling condos. So the way we kind of, we don't necessarily think at our firm that's going to happen. So we're at least not in the immediate future. There's potentially too many consequences for that on a macro scale. But these two things that we see, so when you're dealing with a city like Boston, there's so much red tape that if you get into a project without sort of a backup plan, or a worst case scenario, still kind of breaking even. For example, a very simple way to put it would be you buy a property in a 3-family zone. You should make sure if you get denied for your variances, you get denied the zoning board of appeals, you could still develop a 3-unit property that would at least break even, the worst case, because by the letter of the law, you can do that. You don't need special permission. You're in a 3-family zone, you're allowed. So look at that scenario. If that scenario loses a lot of money, then you probably shouldn't get into it without protecting yourself and minimizing that risk, either by having a contingency that Nick spoke about, or some sort of backup plan. So that's kind of the local political municipality risk, because in Boston is just very difficult to develop, and it's getting harder and harder. Not even every year, it seems like every month. There's much more red tape. And like I said, the other thing would be more interest rate risk when you're selling condos. Buying power does go down for buyers as interest rates go up. So one way we kind of, try to eliminate that is we say, okay, look, where's the market at right now? A lot of developers project out, the market's increased at this rate. This is the value of homes, a year ago, this is what they're at now. I'll continue with that and project that I'm going to sell them for this much higher than they are now. We don't do that. We project as is, even if it's 2 years out, even sometimes with like a 10% hit to see, would this still work? And if it doesn't, we second guess that project. So that's kind of how we try. That's how two of the biggest risks we see. And those are kind of the ways we would eliminate them in our business. But also just the idea of diversifying within real estate, where you have the different asset classes that we have and the different types of verticals that we're involved with, is sort of another layer to risk minimization.
No, I think those are both well said. The definitely the political thing, and then also just being conservative in your numbers, make sure that your numbers are going to work regardless, rather than counting on those historical ups. I mean, it is funny how it doesn't matter what market it is, whether it be the real estate or stock market, whatever. People don't seem to remember their memory of markets reversing or forgotten when it's in a go up kind of thing. So, but well said. Nick and Eric, where can the listeners go if they would like to learn more or connect with you?
Yeah, you can check out our website, winterspringcapital.com. We've got a lot of educational articles about development, all topics about real estate, really. Then we also have some investor guides. I wrote a book about the condominium development strategy. You can get that at winterspringcapital.com/development-book. And then we're on social media, pretty active on LinkedIn, just under our names, Nick Earls and Eric De Nicola. And then we're also on Instagram, where you can kind of see project updates, videos of the buildings we're developing going up, lots of good stuff like that.
Awesome. Well, Nick and Eric, I can't say thanks enough for taking the time to talk today. I've enjoyed it, learned a lot, and look forward to doing it again soon.
Hey, thanks so much for having us on.
Thank you, Darren. Appreciate it.
You got it. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CRE PN Radio.